hello to you. Warm welcome to the CWJobs Breakfast Briefing, and thank you very much to Richard Knott for inviting me back again this year. Here to give us, I suppose, a holistic overview and talk about banking technology. Please give a very warm welcome to David Bannister.
Technology is constantly innovating. That's the whole point of it. I was reflecting there, CWJobs comes from Computer Weekly magazine, which is something I knew 32 years ago when I worked on Electronics Weekly, and CW spun out of EW because it became such a big subject, much as mobile banking is spinning out of banking technology these days. Back then I worked for what was then IPC, is now Reed, and the editor of Electronics Weekly decided it'd be a very good idea if I, as the computer guy, sat next to the telecoms lady, because there was a convergence of telecoms and IT. And this is really quite good, because it's taken 30 years and I'm now working for the telecoms division of Informa, because mobile banking and banking seem to be put together. So as of last month, and we've embraced the web for a bit longer than a year, but we're really pushing into it now as part of the telecoms.com people who write an enormous amount about mobile commerce, usually from the point of view of people other than banks. One of the things I'm not going to be able today to tell you is what kind of skills, etc., are really required in banking and mobile, because it's not entirely clear. The holistic view would be that the industry is clearly in flux. There are a lot of activities going on, lots of figures to be bandied around about the growth of this and the number of applications of that, and the number of new payment processors there are. I think there's 243 payment processors or non-banking organisations, including things like British Telecom, across Europe, some of which are active, some of which have just got a licence and don't quite know what to do with it, like British Telecom. So nothing's very, very clear. And the whole situation at the moment reminds me, it's an adage I quote quite often. Some of you might have read a book by William Goldman, who wrote Butch Cassidy and the Sundance Kid and a number of other films, a great screenwriter. And he wrote his autobiography as a guide for screenwriters. It's used in screenwriting courses, media studies courses now, adventures in the film trade. And he tells the story of when he wrote Butch Cassidy and the Sundance Kid. It was largely financed by Robert Redford, but Robert Redford felt that he was the wrong guy for the part, so he wanted Steve McQueen and Warren Beatty. And then they got Paul Newman. Warren Beatty couldn't do it, and it was going to be the other way around. And they weren't going to have a song, and they were going to live at the end. Can you imagine Butch Cassidy and the Sundance Kid without that ending at the end? Similarly, Casablanca was originally going to have Betty Davis and Ronald Reagan in the leading roles, which wouldn't be quite the same classic, or would it? Goldman's point was that, and the motto of the book was, nobody knows anything. And that's exactly where we are in the mobile banking, mobile commerce, e-banking, whatever you want to call it. I don't have many slides because I once, in that 30 years, went to the launch of PowerPoint, and I still haven't actually worked out what it's for. So basically, these are some of the things around that people will be talking about in terms of what they mean by mobile commerce, mobile banking. As I say, what's going on is not clear, but it's coming from many directions. I mean, my inbox is full of new payment initiatives and products, services, expertise, comment articles, telling me that the world is changing, and I know Michael is going to say this as well, and the world is changing, but it's changing for different people for different reasons. So the drivers in each corner are very, very different. Obviously you have the telcos who want to carry things over their networks. You have the banks who just really want transactions to flow through and keep all your money, which is the great myth. You have the retailers who want to make things easier. You have us who want to have easier access, make things easier for us. The credit card companies, I think, very separate from the banking industry. They used to be owned by the banks, but they were hived off 20, 30 years ago, and are now coming back as a competitor to the banks, much to some banks' annoyance. And there's a whole mix of new people coming along. The pure mobile commerce people are probably developments on from the internet commerce people, Amazon, PayPal, Google, those kind of people. And they've got their own take on these things. Everybody's moving forward and nudging in this sort of direction. And they're all doing some of these things. This is my theory anyway. because when I get press releases and announcements, I say, what is this? What is this? This is cash replacement. Right. There's a great thing. You can go and follow this on Twitter. There are a number of people, and Michael might be one of them. I've certainly been at conferences where he's spoken on this subject. It's cash replacement, the war on cash. There's a Twitter hashtag, war on cash, where lots of people from the mobile and the retail area talk about the war on cash. Cash is a terrible thing, apparently, and we must get rid of it. Nobody wants it. Well, banks don't particularly want it. The cash in transit industry doesn't particularly want it. It's quite expensive to deal with from the bank and the cash in transit point of view. Unfortunately, and I wrote this story a couple of weeks ago with the headline, "The war on cash is being lost." It's like the war on drugs. It's not really winnable. And I got this from the British Retail Consortium, who in May said that year on year, the use of cash in the UK had gone up 5.7% and accounts for 58% of all transactions in the UK. So that's in the middle of this big retail mobile commerce revolution. Cash goes up in use. Partly, apparently, because there's a recession and everybody wants to hang on to their cash and not know where it is. Does that square with another figure that came out of a conference that was at earlier this year, which shows that Starbucks in the US is now seeing 25% of their payments on their mobile app, which is a kind of strange. I don't know if you've seen the Starbucks app. It's not a near field thing. It actually generates one of those square barcode things, and it reads it like an ordinary barcode. So it's a strange kind of hybrid type of application. And then, of course, you've got, as everybody in London knows, the success of the Oyster card. And we're going to have the Olympics, which is going to be the big mobile thing of all time, unless you don't have a Visa card, in which case you're really stuffed and have to go and live in another country. Or walk. Well, in fact, we're all going to have to walk anyway because we've got our Oyster cards, but the Olympics are going to close down the city. So the Oyster card and the other things, the second area is this card replacement idea. Now, this is largely, I think, most of the announcements we get about this, most of the things we see in developments are around the move to contactless cards. We've all seen, originally from the credit card companies, the MasterCard and Visa with PayWave, and now we're seeing it from the others. Barclays were doing it early on, partly because of the Barclaycard relationship. We've now seen that HSBC has just announced that it will be issuing contactless versions of all debit cards as they come up for renewal. I noticed mine comes up for renewal in 2015, so I've got quite a time to wait. So I won't be using that anytime soon. What worries me about this is if everybody's talking about mobile payments and the use of mobile wallets and on an iPhone or any other kind of smartphone, if that infrastructure is being put in by the retail banks and the retail organisations, how is that going to get replaced by the smartphone infrastructure? Nobody's going to waste all that money putting things in and then rip it out a few days later, including the retailers. So I think contactless is going to happen. It clearly is happening. We already use it with our Oyster cards. Whether we then combine that into some sort of multiple wallet type device is less clear. And there's the new version, iOS 6, of the Apple operating system, supposed to have a sort of wallet in it, which I like the look of because I can keep all my frequent flyer cards in it, but I don't think I can use any money in it. So I'm not clear about this one. It means that when we go to all these conferences around the world and talk about contactless payments, we've all got our frequent flyer cards in our iPhones. I've already got mine in there, they're just not in a wallet. That doesn't make a lot of difference to me. I think we will see it in the public domain, especially in the UK, a lot more, through the post offices. There was an announcement last year with HSBC Merchant Services, who are putting contactless card readers in 11,000 post offices. Now, HSBC Merchant Services isn't related to the bank anymore, because obviously the bank didn't want to have anything to do with merchants. That would just be dull, wouldn't it? And they'd have all these demands they would make. At the same time, through the card issuer groups and the Payments Council, there's been an increase in the limit you can use for contactless cards, up to £20. That's the second time it's been increased in about 2 years. It was £10, well, it was €15, so £10, so it's probably still €15. It's £20 now. This is quite useful. I don't spend a lot of money in Starbucks, either with it. £20 seems a lot for coffee to me. And it sort of slightly worries me because I tend to buy most of my coffee from my local deli. So I happen to know the guy who runs it, and he keeps asking me about whether he should get a new contactless reader. And I said, well, you have to, because it's the way the world's going. Oh, yes. And he says, why would I pay for it? Because most of his transactions are under £10, largely under £5, because people come in and buy a cup of coffee and a croissant and get on the tube and go off to work. And they pay him in cash. He quite likes the cash, because there's no real charge on that for him, but going to the bank to cash it in. If you go back to the figures from the British Retail Consortium, they show that it costs something like 24 times as much to take a card payment as it does take a cash payment. And from a small retailer's point of view, that's really quite a heavy charge. If you're getting charged 15 pence for every debit card on every £5 you use, that's really a bit of a tax on your business, isn't it? So he's not very keen on it. And I get a discount for giving me all this advice. I usually get a free croissant, which is quite nice. I guess eventually the charging structure will change and that'll become useful for him, but at the moment it's those kinds of dichotomies between what retailers want, what customers want, what banks can provide, and what the technology providers in between all that are doing, that makes it very, very difficult. And I think that it will take years to sort that out. I mean, 3 years for me to get a new contactless card, unless I lose it or something, or cut it up, or have it taken off me. The point of sale area, that takes you to immediately, I mean, clearly you're not going to pay for this. When you want to go back to when some of you might remember, there was a time when you didn't have barcode scanners in supermarkets. They were launched with great fanfare by IBM in about '79 at the Science Museum, and yes, I was there. It was very exciting. Tesco's and IBM got together and announced this barcode scanner at the Science Museum, and then Tesco said, it's great, IBM's paying for it to go in. And this happened throughout the country. When the next generation of cards came along, the so-called chip and pin cards, there was a massive, massive row, because Tesco said, great, when are you putting in the new scanners? And the IBMs and the chip card people said, well, we're not bloody paying for them, this is you. And if you remember, there were lots of rows about where the liability would lie if you didn't have chip and pin. I'm speaking, as all journalists do, I get a lot of my insights from coffee shop owners and publicans. Not so much cab drivers, because expenses aren't what they were. My local publican down in Sussex is actually an ex-bank manager. Used to be at the Woolwich, took the redundancy money, opened a pub, very nice, the Bridge Inn in Amberley, I recommend it, a very good pint of Sussex. At a loss leading price of £2.82, and he doesn't have chip and pin in his pub. He will take cheques off you. He lives in a nice quiet village in Sussex. Nobody's ever bounced a cheque on him. If they do, Roger Oliver, the local vermin destroyer, will go and see them with his shotgun, and the thing will be sorted out quite quickly. But there are people in that part of the world. I live in central London, I go there at weekends because that's quite a fancy thing to do. There are people down there who do have a need for some sort of payment. There's a lot of country sports people down there, and they were very, very active in the anti-cheque replacement movement. Remember when there was a bank said, we're going to get rid of cheques. There's a very good reason for getting rid of cheques. If you're a bank, they cost about £6 each to process, which is quite shocking, really. With some of the inefficiencies within banks might get touched on by Michael. But clearly that's a very great expense, so they'd like to get rid of them. If you're running a business, and there was a guy fantastically on the Moneybox Live programme who sells grandfather clocks at country fairs. Grandfather clocks cost around about £200 or £300 each. So people gave him cheques with an address. When it cashed, he would ship the grandfather clock to them. Getting rid of cheques, he's not going to sell any clocks. So they said, that's all right, you can use mobile payments. In a field in Sussex. This was a bit of a problem for him, because one, he didn't have a mobile phone. Two, he was in a field in Sussex, which doesn't have much coverage. That's starting to change now. You're seeing ideas like Square come along. This is coming from the technology companies. Square's the UK one, isn't it? I think I never quite work out what geographies they do. Yeah, and PayPal have got their new gizmo. You plug it into your iPhone, and suddenly it's a point-of-sale terminal. Might work in the countryside. I can see him selling his grandfather clocks with this. Might not, because he's a bit technophobic. Otherwise he'd be selling digital clocks. So there's a lot of hypothetical changes going on in there. One, even in areas where you might expect a change or an embracement, is that, can I use that? Embracement, yes. People to embrace, people sub this later on, people to embrace the technology. That's not necessarily the case either. We did a thing earlier this year with banking technology where we were asked to get together some retailers, some payment providers, some banks, and talk about some of these issues. And one of the people we had was head of online sales for Dixon's Currys. Currys Online, Dixon's Online. They're rebranding as we speak. And he was being asked why he hadn't put in contactless things in his shops. He said, well, one, I'm head of online, which was a reasonable answer, but they particularly want online and branch sales to be kind of seamless for people because they sell high value items like televisions and hi-fi systems, computers, laptops. So they want people to browse online, decide on a price. Maybe they'll buy online, but they shouldn't really buy a £1,000 television online. Go down to the shop, look at it, sell them an HDMI cable at £50 as well, you know, a bit of upselling. He doesn't really need contactless payments because they cost more than £20, and he doesn't really need to save 15 seconds per transaction. Also, he's got a lot of shops, and he replaces his point of sales terminals on a 3-year cycle. So he might, when it comes round, get contactless payments, but he won't really have a use for them. So the use case isn't always there either. And that's a bit of an issue as well. The other area I've kind of put up here is where you start moving from the mobile world into the banking world. Because in all of these cases, I mean, obviously point of sale, most people use a debit card or cash, and that affects the transaction goes straight through to the bank. In-app payments are kind of complicated because they go through a circuitous route to get to the bank, particularly if you've got royalties, and it's fantastic. I was talking to a guy who runs one of the micro royalty things for iTunes, and he told me 2 interesting facts. One was that iTunes has only 35 staff worldwide, most of which are lawyers and doing royalties and copyright, and that some of these things, when you buy a Beatles song, which you can now do, it's not clear who owns the royalties. For instance, all of the John Lennon songs, money goes to Yoko Ono. Some of the George Harrison songs, some money goes to Patty Harrison, some money goes to his son, some of it goes to Paul McCartney. All this happens when you're buying music online. What you see coming out of your bank account is irrelevant, but there's this whole current of other things happening in the background which need to be factored into the way the networks are operating and the skill sets that are coming along. Because it's not just about the connectivity or knowing, you know, having degrees in mobile, which I didn't know you could do, but then I'm still surprised you can do degrees in journalism. As far as the banks are concerned, of course, bring on these transactions, the more the merrier. Banks like transactions. It's things going in and out of your account that you can charge people for. In some countries, not so much in the UK. So the more the merrier for that. Transactions are transactions. And what we're seeing here, and actually I've sneaked a look, I don't do very many slides. Michael's got loads of slides. And one of them I sneaked a look at, so I'm going to tell you what it's on it, because it's rather good. We both agree that one of the skill sets that is changing is people within banks are moving from the banking world to these other worlds, to the Googles, to the PayPals, setting up their own companies as consultants, because what their expertise is how payments work. Now everybody has this view that payments are relatively simple things. You know, you take your money out of your account and it goes over there, it's credited to this account. It's not quite as simple as that. I'm not sure why. I just know that I've been for the last 10 years to the International Payments Conference and the CYBOS conference that Swift do, and sat through sessions that I didn't understand. Where those people talking about payments, and I'm sure Michael will agree with me, why is it that complicated? I don't know. There's all sorts of laws in different countries, there's technical issues, there's plenty of things going on. These guys within Deutsche Bank are going to Google and taking that expertise, because the actual technology of moving the things from place to place isn't that difficult, but knowing what you're doing and knowing about the irrepudiality of the transaction and the legal framework you're operating in, those are skills that people need to set up these new payment frameworks. Excuse me. So there's people flowing in that direction. The second area you've got here which is what Michael had been doing, is the bank apps. They're not very good, are they? Most people got an iPhone in here. You've got a bank app on it. Tells you your balance, really, doesn't it? It's not really mobile commerce. I've got an HSBC are probably getting used to me slagging them off by now. I do it in the magazine. I pay them £16 a month for the privilege. They charge me for the overdraft. It's quite simple. Balances out. I write cheques a lot because it costs them £6. We have a nice relationship. A lot of the apps that exist, the HSBC one, which is called Faster Balance, I can get my balance faster on my iPhone than I can by going online. Actually, I just go to the ATM and ask it generally. It's just a development of the internet banking service, and it hasn't taken any of the real functionality of the internet banking service on. I can't do very much in terms of paying the rent or paying my bar bill or anything like that with it. Earlier this year we saw, I think, what is probably the beginning of a revolution from the banks side of this thing, which is the Ping It service from Barclays. Now, Barclays Ping It, you can ping money to people if you've both got Barclays accounts and you know the other person's telephone number. So you're using the telephone number as an identity there. Now that's quite clever. That's done by having a proxy service through the VocaLink service. VocaLink's the payment thing at the middle of the, it used to be called Backs and Chaps and stuff. It's Voca and Link. You still see the cash machines with Link on them, but they're run by Voca. They had a competition to choose the name Voca. It doesn't stand for anything. Someone won 200 quid in John Lewis vouchers, but that's who does it. Most people, they're invisible plumbing. 98% of UK salaries go through VocaLink. So they've got, or can have, if you give your bank your phone number, and you can link that to your bank account. It's as simple as that. I joined Ping It. I don't have a Barclays account, but I'm a member of Ping It, so it's just taking up memory on my iPhone, which isn't very useful. But the reason I joined was because it was there, and I wanted to write about it, and hopefully other banks will come along. In fact, other banks were going to come along. The UK Payments Council had a press launch with all of the banks, all of the UK high street banks, including Santander, on the 14th of February this year. It's at Valentine's Day. And then a few days before, they announced they were cancelling the press conference because one of the banks wasn't ready. Wouldn't have been RBS, would it? It wouldn't have been them. No, they were ready for mobile, weren't they? Yeah. We're not sure who it was. It certainly wasn't Barclays, because they immediately announced they were going to launch Ping It anyway, much to the annoyance of VocaLink, the UK Payments Council, and every other bank. And they've gone ahead and done it. Everybody else is going to do it in, they say September, I'm betting on October. You'll be able to send money to anybody that you know who's got a mobile phone number and who's got a bank account linked to that. And presumably they'll tell you. This would be very useful for my man selling his clocks in the field. Because he can say, what's your phone number? Bang, send you the money. Done. Send me the clock. Not sure that transaction's all that balanced, is it really? He gets a receipt for the clock, I suppose, but then the bill for shipping it and all that. But I may have to find a better example for future. It sort of works in a way, and there's all sorts of, again, we go back to the use case. Every single press conference I've been to, and every single conference where someone's talking about this, they say it'll be really good for sending money to your daughter when she needs a cab. It's not a use case I have at home. It's not one I recognise. My daughter's 11. I might recognise this in about 6 years' time, or possibly sooner. It's scary, but I do wonder if all of these press conferences and speakers at events are saying, this is what it's for sending money to teenage girls. I'm not convinced, and my wife is even less convinced. So Barclays jumped the gun a bit. Now, banks, I think, in general, do hate this whole thing. One, they don't get it, because, and that's evidenced by the fact that all of the running is being done outside the banking world. They kind of get why people would want to do some things, but they don't understand why they want to do them in difficult ways that the bank doesn't make any money from. One of the real key things, though, on a practical level, and this came up, of course, with what Nadine called the debacle, or I called a cock-up, RBS and NatWest, and Ulster Bank and a few other bits and pieces, is this batch versus real-time issue. I was a bit surprised at an IBM conference 8 years ago Well, one of the big guys from IBM stood up and said, most banks in the US are operating illegally because their overnight batch windows for processing ATM transactions are running on till the bank opens in the morning. You'll remember that banks used to shut at 3:30 in the afternoon and open again, or probably next Tuesday if you were lucky and you might be able to see someone. There was a massive overnight time where they could process everything. ATM transactions, which I always thought were roughly real time, because it seems to come out of your account pretty much in real time, it does, it holds it in a cache memory and then it's matched up against your, I've got to be careful, I don't think HSBC do it this way actually, but many banks do it this way. It's matched up against the master files during a short batch window overnight. That batch window is getting shorter and shorter and shorter, and it's also getting backed up by ever more numerous, and Michael's going to got the numbers for this one, electronic transactions that are in real time. If it goes wrong and they get out of sequence, it's roughly what happened at RBS. All of those things are now backing up, like the tide coming in. So even if you get them in sequence, you've still got this, and it got to 500 million transactions that was still had to be processed in sequence, and possibly at Ulster Bank still have to be processed. I've been on Irish radio twice. They keep saying, "Why, David? Why?" I'm sorry, I don't know. It is quite a shocking thing. They everybody stop using the ATMs for about 24 hours. It'll be sorted. This happened last November, because I think it's unfair to single out RBS, because all banks are equally at risk. That's probably the best thing to say, at risk, because of their legacy systems. The CA system that was at fault, the scheduling system at RBS, was installed 30 years ago. It's even older than me. Well, in terms of writing about this industry. I wasn't at the press conference where they announced that one going in. And it works quite fine. CA shouldn't feel too bad about it. It worked for 30 years. It's just suddenly the world has changed. So this batch versus real time, ATMs versus point of sales, internet banking, mobile banking, you want that money to be happening instantly. Unfortunately, your bank account is not being updated instantly. I'm sure once they get that sorted out, they'll love to offer you a mobile service. Legacy systems are still a massive issue. They were for HSBC last year, when Friday afternoon their debit cards stopped working. Wasn't too bad, because when debit cards stopped working, nobody could do anything, so there was no backlog. By Tuesday afternoon, they got it sorted out. If they had a backlog, it might have been very similar to the RBS situation. The second area, I'm going to leave the last one, because the myth of the float. A lot of people think that banks, I won't leave the last one, I'll just deal with it now. A lot of people think that banks like to hold on to your money. This is what they do. They hold on to our money. Some people even said this is what RBS and NatWest were doing. They'd run out of money, so they were holding on to ours. And they were keeping the overnight interest. It's not really true. Lloyds keeps all the interest, for the simple reason that they used to drive the van down to Sydenham. In the old days when we had cheques, all the cheques were put into the London clearing pool, which was in Lombard Street, and the man from Lloyds used to drive them down to Sydenham. And they'd sit there going, "Barclays, that's yours, Lloyds, that's mine," and it went on like that. And for driving, they got to hold the money overnight in a holding account. Even if they were to pay you that back, and if you're a Lloyds TSB HWAS customer, you would get something like 20 quid per year for the amount of interest they make. It's not an issue. So I just wanted to get rid of that, because actually banks like the transactions, so they ought to like mobile commerce. The middle area, and probably the last one I really want to touch on, is control and security. Now this is definitely a hot topic, and this is definitely one where there's lots of jobs coming up, because, and I'm going to quote a guy called Derek Wild, who's head of security at HSBC, and he was speaking at the SAS conference recently on data control, and he said, in terms of security, mobile is where the war is. We're fighting very hard there. And that's against a background where he also said that he's seeing a 63% increase in ATM fraud in the last year. So imagine where the mobile fraud is going. So there's the fraudsters targeting now. I was in WH Smith's the other day, looking at these Kindle things, and they were trying to sell me, not very hard, but they were trying to advertise Norton antivirus for my Kindle, which I don't have. I'm not going to buy one if I have to pay £29 to Norton as well. That's it's far too much for a Kindle, because apparently you download viruses with your books nowadays, and the fraudsters are targeting these things. Banks are very, very worried about security. Most banks have not really properly been hacked in the way that some of the retailers have. I guess 2 years ago I would have probably said none of them had. They're all very proud of their security, but nowadays, you know, with governments doing it, who knows? It's quite likely that all of them have. But there's two aspects of the security, and you'll see this, and again HSBC is a good example. If you've got an HSBC account, you'll have a little widget thing, which is a little calculator, and you key in and it gives you a number, two-factor authenticity stuff. They're going to increase that. Derek says, love it, it's helping, we have to, because they have no control over what the customers are doing. If you're going online banking and you don't have a safe, secure PC, you're a threat to their systems. If you're doing that on a mobile, and you could be anywhere in the world, how you control that in real time and authenticate it is a massive, massive problem. They're looking at voice biometrics, they're looking at data sharing around the world using the big SaaS databases that they were talking about at this conference, and they're spending hundreds of millions of pounds on it. Massive problem. The other aspect of control is the one area that banks are all spending money on, and a skill set that everybody needs, which is regulation and compliance. 60% of money is getting spent on regulatory projects. And with that amount going there, banks haven't got time to worry about mobile. And that's my lot. Thank you.
Thank you, David.